This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call this Thursday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, Prashant. Good morning. Hi, Nigel. Morning. So the big rate hike has come and gone. And it would be interesting to see if the market moves on, right? And whether it resumes the buy on dips or not.
Well, I think, the Indian markets out here, the traders, they said, let's factor in some bit of disappointment. Last couple of days have been pretty much muted. But they did what they were expected to do, right, Prashant? More on that.
Absolutely. Who was up, by the way, watching the Fed meeting?
None of us.
I know someone from the newsroom who was up, not me.
No, I wasn't up, but the Mumbai Indians game was quite interesting. And, we came out, Trump's then packed up and went to sleep. No Fed.
All right. But, if one was hoping that the meeting is going to be very decisively informative, that was not to be, right? I mean, it was a little bit of this, a little bit of that. But we have to distill it down to takeaways for you. And that's what we're going to do. So the message from the Fed, if you want to kind of take all of it in, was that this is a reading. This is, in a way, the summary of what the Fed meeting was about. The message was that we are getting close to the end of the hiking cycle. I mean, I think that came out more clearly as compared to any time in the past. That's point number one. The reason why this was seen to be so is because the Fed dropped its forward guidance, which basically said that we anticipate more rate hikes. That particular quote was dropped. Actually, there were a lot of changes in the statement which the Fed put out. And they said that we will go by data and we'll take a decision meeting by meeting. The press conference, right? The statement was the statement, but the press conference had something for the bulls, something for the bears. So, while he said all of this and he did indicate that we are perhaps to the close of the hiking cycle, he did push back. Fed Chair Powell did push back that maybe the market is pricing rate cuts too soon. He said if their view of data comes true, then rate cuts will not be warranted this year, etc., etc. So there was a little bit of this, a little bit of that. And that's why I'm saying that if you were looking for a very decisively informative sort of meeting, this was not it. The market reaction also told you some of it. The S&P was down. It was in a tight range, and towards the close, it came under pressure, 0.7% lower. The US 10-year yield was down 9 basis points. Just take a look at what has happened this week. We started the week with a 15 basis point jump, then we saw a 14 basis point cut, then we saw a 10 basis point jump, and now we're down 9 basis points. So it's not moved very much. 3.34 on the US 10-year is where we left off. Now, post-US close, and I think this bears watching, it came after US markets are already shut. Another US regional bank seems to be in trouble. There was a Bloomberg story which said that they're looking for suitors and they're looking for options, and one of it could be perhaps considering a sale. So this needs sort of watching in terms of how this progresses. By the way, the Fed chair in his press conference did address the bank issue. He said that overall the system is pretty healthy, and then we get this after close. So it's a volatile kind of situation. Stocks in the regional bank index post-close did correct quite a bit. Oil prices have come under pressure, and they're now down almost 10% in 2 sessions flat. So in a way, oil markets are, and this is broad macro concerns, it's not some data on inventory or anything of that sort. So the oil market is pricing in a much more severe, a deeper recession. Will it come true? Will not? That's a different thing. Equity markets are not. So perceptions at this point in time vary quite a bit. Let's come to the market here. Yesterday, we had a negative daily close, both on the Nifty and the Bank Nifty. Towards the close, of course, the market recovered a little bit. On the Nifty, I'll start with the lower levels. The lower end of the rising channel now stands at 17,920. And that's the support level, which you need to kind of put in place and should not be violated if you're trading. On the upside, a break above 18,180 should be watched for more upside levels to materialize. 18,180 is the level to watch. For the Bank Nifty, again, starting with downside levels for approximately around 40, actually it's about 43,010 or so. 43,000 will be the near-term support level. And that's something to watch closely. On the upside, a break above 43,484. I mean, both these levels on the upside on the Nifty and the Bank Nifty are levels, the highs which were made day before yesterday on the respective indices. So the Bank Nifty 43,484, a break above it will indicate further higher levels to come. We are, as I said yesterday, in a bit of a state of flux market, a lot of times it so happens that US market reactions comes more forcefully, not on the day of the Fed decision, but a day later. Views are crystallized, people are more clearer about what they want to do, etc. And of course, there is new information in the form of this bank thing as well in the US, regional bank thing in the US as well. So we kind of remain in a similar kind of state where we were sort of yesterday when we started the session. So maybe in a bit of a no man's zone once again. And this is important given the fact that we've rallied quite a bit very, very fast over the last 4 weeks or so. 18,100 or so is what the SGX is indicating in terms of a start. Sonia.
Oh, absolutely. And I think this morning, the disappointment is not more to do with the rate hike, but it's more to do with the fact that rate cuts are off the table. At least that's something that the Fed has said. It's a certain degree, degree of certainty that rate cuts are not on the table anytime soon. So the market mood is a bit somber because of that. Of course, they also mentioned that they are closer to the end of the rate tightening cycle and not the beginning. So in that context, perhaps no more rate hikes, but rate cuts not on the table anytime soon. So that's the reason for the market, dip that we saw overnight across the globe as well as on the SGX Nifty. But all eyes will now be on the initial jobless claims data that come out today. The payrolls report comes out tomorrow. So in that context, we have a lot of global data to reckon with over the next 48 hours. The Nifty yesterday closed above the 18,000 mark. There were minor cuts that we saw. FIs continue to buy, which is a good thing. So FIs bought about 1,400 crores in the cash markets, while DII sold about 583 odd crores. So, flows are a bit muted on the DII side, but FIs, continue to see the momentum. So the big question that I'm asking myself is, will the market resume its buy on dip strategy? And that could be tested today once again, because the SGX Nifty is indicating a muted start. There are a lot of earnings to track as well. Today you'll have names like HDFC, Hero MotoCorp, TVS Motor, Adani Enterprises. There is Dabur, United Breweries, all of these companies announcing their numbers. So we'll keep that on our radar. And Titan is the big one that reported its numbers post-market hours yesterday, largely in line with estimates, actually. There were no major surprises either way. There was just a mild miss in margins, and especially in the eyewear business. But otherwise, the revenues were actually a beat led by the sale of gold ingots. So, that's something that I don't think the street will react to too much. They were largely in line with estimates. But as we were saying, the big question now, I guess, is whether the market resumes its uptrend. The fact that there won't be any rate cuts anytime soon. And I think a lot of people were hoping for that to happen, that once the rate tightening cycle ends, in the start of the new year, there could be rate cuts. But no, that's out of the picture. So maybe the market's sulking because of that.
Maybe, Sonia, the SGX Nifty is suggesting a bit of a downtick, which I think is not such a bad thing. The last couple of days, the Nifty has been more or less sideways, a little bit lower. We've come off 100 points in the last two sessions from the Tuesday high or so. But today is weekly expiry. So the options data becomes very, very important for today. Now, we have lower crude prices overnight. You have a weaker dollar as well. This is a tailwind for emerging markets and India in particular. The bulls have positioned themselves that they can defend the 17,950 to around 17,975. So given that we like to start off on the back foot, maybe a buy on dip strategy will work out with that stop loss at around 17,950 odd. What do the FIs do? They're back to their shorting ways. Now, that's not such a bad thing. We want some shorts in the system. That's what could give an additional fillip on the way up. If they go net long, then you're only counting on their cash market buying. So yesterday as well, they added close to 9,000 short contracts. The short position goes to around 54% odd. On the option side, they bought protection. They bought more puts than calls. So close to around 2 puts is what they bought for every 1 call. But the heartening fact is that they continue to write puts. And that's a good sign from a bullish perspective. And the options data, the Nifty Bank, well, yesterday we did see the 43,200 put. That added a fair bit of open interest. The rough premium out there would be around 180 odd. So those put writers, they are suggesting that that 43,000 level should hold out. That's a crucial support zone on the Nifty Bank. On the Nifty, the 18,000 put has the highest open interest. So that's why you're counting on the lower levels holding out. Though on the upside, call writing is quite aggressive as well. 18,200, 18,300 call, both of them added close to around 50 lakh shares between them, which brings us to the levels. The recent high is around 18,180 odd. That's a bit of a resistance zone, 18,150 to around 18,180 going by the options data. And on the downside, the 17,950 to around 17,975. That's a crucial zone. My guess is that today, risk reward could favor you if you get that 60-70 point downtick, closer to around 18,000 with a stop loss at around 17,950 odd. So let's see how this one goes.
All right. Well, 18,100 is where we are at on the SGX Nifty at this point in time. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We'll get you updates from markets across the globe. Jahangir Aziz of JP Morgan will be joining in for some discussion there. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, Deepan Mehta will be joining in to talk about individual stocks and what he likes, what he does not, and comments on results as well.
Okay, well, let's kickstart with some opinion coming through on the equities front. We have Eric Fishwick of CLSA who says the Fed has raised rates by 25 basis points. He expects no further hikes but rejects the idea of early cuts. He says evidence that the labour market is finally starting to ease will keep yields contained and the US dollar soft.
Jonathan Garner of Morgan Stanley says a prolonged process of resetting the US federal debt ceiling over May or June could trigger corrective price action in cyclically exposed markets and sectors. For Asian equities, he says a key mitigating factor versus the 2011 episode is that growth is still accelerating in absolute and relative terms versus the US.
Let's also get you some money market views and tell you how to approach that market. Parul Mittal Sinha of Standard Chartered says the dollar INR edged lower on dollar weakness and a drop in oil prices, even as consistent dollar purchases by PSU banks capped the down move. She expects the dollar INR to trade in a range of 81.45 to 82.10 for the next week, post a much expected 25 basis points terminal rate hike by the FOMC. She says apart from the dollar and oil prices, dominant forex drivers would be flows into domestic markets, which have been positive recently, and RBI's continued efforts to build forex reserves.
On bonds, Parul says that domestic bonds rallied, tracking global rates, a cooling in oil prices and expectations of a benign inflation outlook. She expects the 10-year benchmark bond yield to trade in a range of between 6.95 to 7.15% next week after a 25 basis point rate hike by the FOMC to 5 to 5.25%. She says while the data-dependent FOMC is still left some room for a potential future hike, market believes that the Fed has now entered a prolonged pause before it starts cutting rates by the end of 2023. Apart from global trends, she adds a key domestic trigger for markets would be April CPI data, which is expected to be sub 5%.
All right, we have a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Big Boy, Reliance Industries, ABB India, Cholamandalam Investment, Tata Chemicals, Sula Vineyards, as well as Sona BLW. They are stocks on the back of positive news flow, while on the flip side, you have Titan, Abbas Financiers, Petronet LNG, and KEC International that could be reacting to negative news flow.
Okay, Jahangir Aziz is now joining us. As promised, he's head of emerging markets, economics research and commodities at JP Morgan. Jahangir, great to have you with us here on the program. Thank you very much for your time. Are we, with what we've heard from the Fed last night, are we near the end of the hiking cycle, or did we see the last hike last night? What's your sense?
I think we're probably at the end of the hiking cycle for the time being. I think if you look at the language in the FOMC, it took away, importantly, the language that the rates have to be sufficiently restrictive. I think that was key, which means that the FOMC is reasonably comfortable where rates are at this point in time. Now, clearly, it is not a two-sided risk. They continue to talk about, if the need arises of rate hikes, they not talk about the need arising of rate cuts. And as Powell talked about in his statement, in his press conference, the FOMC, all the staff of the Fed did not see the economy going to a point where you would require rate cuts. So I think for this year. So I think we are probably in a period of prolonged pause, and we'll need to wait and probably wait till the beginning of next year to see rate cuts taking place, provided the economy, complies with it.
Jahangir, hi, good morning. So if this is a period of prolonged pause, as you call it, what do you see the effect on other risky assets, maybe assets like equities? I mean, what has history taught us? Because, the expectation was that at some point the rate tightening cycle would end, and now it has. So what does an investor expect to see from here on?
So on U.S. equities, we have, held a view probably from around October, November of last year that the market is overvalued and the market needs correcting. But that has very little to do with the rate hiking cycle. So the rate hiking cycle, that the rates would go on a prolonged pause was part of that scenario. I think to a most extent, the view about the overvaluation of the U.S. equity market was driven by the fact that earnings would start falling because the economy would slow down. And if you look at the U.S. equity markets, let's take S&P for example. If you take away the top 10 tech stocks, most of the market is actually going in that direction. It's the tech stocks which is keeping the S&P 500 where it is. So I think on the equity side, we've long held a view that the market is overvalued and the market needs a correction.
All right. Hi, Mr. Aziz. Good morning. In this sort of a backdrop, what about the RBI? What are you factoring in, inward-looking data from the central bank? What do they do next? They paused, but do you think that they are done, or do you think we have a couple of more rate hikes here from the Reserve Bank of India as well?
Well, I think the Reserve Bank more or less is done, right? And I think that it is probably going to hold rates till, at least till probably deep into this year. I think the problem that the Asian central banks have, as opposed, let's say, to the Latin American central banks, is that the Asian central banks, and I'm talking about India, Indonesia, Philippines, did not raise rates as much as the Latin American central banks. So the gap between their policy rates and, let's say, the Fed funds rate is there, but it's not that much. So in the event that India or Indonesia or Philippines need to cut rates, they have some space. Don't get me wrong, but the space is very limited. In comparison to the Latin American central banks who have rates, let's take Brazil. It has rates at 1375. It has a significant amount of space to cut rates, even if the Fed remains on hold for a prolonged period of time. So I think what really problematic of this of Fed holding rates at this 525 for a prolonged period of time, that if the need arises, then the Asian central banks can cut. I'm not saying they can't cut, but their ability to cut deep is very, very limited, unlike the Latin American or even the Central European central banks.
Jahangir, have you seen news flow with regards to another U.S. regional bank? I think
I was almost sure you were going to ask me that question.
So should we worry about that? I mean, how large is it, and what's the
Right.
Sorry.
Right. So I think we need to take a step back and look at this credit event, right? So all banking stress are not the same. Look at this banking stress. This banking stress is happening because all of the 4 banks involved in the banking stress have had, made pretty bad decisions on their investment books. Rates went up, and these investment books basically are not worth very much. Therefore, they do not have adequate capital to continue to lend. So future credit growth coming from regional banks in the U.S. is going to tighten. And this is a fact that we've talked about in the past. Powell himself talked about the fact that, future credit, constraints will be added headwind. But none of the banks went down because credit quality went down. Credit quality is perfectly fine, which means that the balance sheets of the households, the balance sheets of the corporates, and if you look at disposable income of the households, if you look at the earnings so far that we have seen in this quarter of the corporates, all of them actually point to an economy which is going reasonably strong. So I think that we need to separate the fact that this is being done because of treasury actions that were taken by these banks, and not by the fact that credit quality has gone down. If credit quality has gone down, we would all be far more concerned than we should be about the credit stress that is taking place.
Yeah.
Jahangir, but a bank going down is, not going down, maybe they're required, like, for example, what we saw with First Republic. Banks are at the center of this entire thing, right?
Sure.
And the trouble there spreads slowly.
Absolutely. So you will see. you will see credit stress. You will see credit tighten. But the point, Prashant, is that you want that to happen. If you don't have that, then how will this tightening of 500 odd basis points get translated into slowing the economy? And if the economy does not slow down, then you're not going to get the kind of relief on core inflation or on wage growth that you need to get core inflation down to any comfortable level, which means that the Fed will go back to re-hiking. I mean, that's the corollary to not having a credit slowdown. So we need the credit slowdown to take place. It's part and parcel of this narrative, right?
Okay, just one final question from my end before we let you go, Jahangir. Do you see a growth pickup even in the Indian markets? I mean, we're seeing it with the banks, with the earnings, some of the auto companies as well. And the RBI also went ahead and raised their GDP projections marginally to about 6.5% for FY24. Sure. But are you seeing, the trends improve on the growth front? And what are your own projections?
So we are probably at the one end of the consensus. We look at the momentum in the Indian economy rather than looking at the last year's growth as a whole. And the momentum of the economy is that it's slowed down to the 4-5 handle. And it's very difficult for us to see that from the 4-5 handle, how does it move to the 6-7 handles when the global economy, as we all talked about, is poised to slow down. And exports was one of the big drivers of last year's growth. So unless you see private investment moving up, which is showing literally no signs of doing anything and hasn't shown any signs of doing anything for the last, 6, 7, 8 years, it is very hard to see how just consumers are going to spend their way out and Indian economy is going to grow. So we are looking at a growth number in the 4-5 range rather than the 6-7 range, which is what the government and the RBI has and probably most of the market has.
Though oil is the other big factor, right? I mean, maybe the single most important variable. It's down 10% 2 days, and broader macro worries.
And that is so how do you interpret that, right? Do you interpret that as a good thing or a bad thing? If you look at the oil market is down because it is actually pricing in a near-term recession. That cannot possibly be good for the Indian economy, right? I mean, yeah, you're getting some relief out of oil, but you're really going to get hammered because your export growth is going to slow down. So I don't think this time around, the decline in oil prices is actually a good thing. It would be much better if oil prices stayed at those, 85, 90 levels. I think the Indian economy is used to those levels. And that would be a much better scenario for the Indian economy rather than oil suddenly dropping to the 70s and further down, because that is portending that the oil market is actually saying, well, there's a recession. Remember, this is happening after an OPEC plus, cut has been priced in already.
All right, Jahangir, we'll leave it there. Interesting conversation as always. Appreciate you joining in with that perspective. Thank you very much for being here with us. Well, we'll take a very quick break here. Our list of top stocks to watch, earnings season in full flow. Our research team will be lining up those stocks for you in just a bit from now.
Welcome back. Let's talk about the stocks as promised. Our research team is standing by with CNBC-TV18's top stocks that we need to track for the day. Sonia, you go first. Big boy Reliance Industries, the demerger is gaining momentum.
It is actually. So, more steps towards the demerger going through and the eventual listing of Jio Financial Services, which is big from Reliance perspective and from the industry as well. So Reliance's shareholders, creditors have passed the resolution now for demerger of the financial services arm. It will be called Jio Financial Services. Remember, the board had approved the demerger of the financial services arm in October of 2022, and KV Kamath will be the non-executive chairman of the demerged entity. There are big plans with Jio Financial Services, and Reliance shareholders will receive 1 share of the demerged entity for every 1 share that is held in the parent company. The company eventually will be listed both on BSE and NSE. Now, brokerages are very upbeat on the potential that the financial services business has. Jefferies expects the listing to happen by September of this year itself. Macquarie says that Jio Financial Services will be valued at over 1.5 lakh crores and will be the 5th largest financial services firm in India. Now, remember, the demerger will help the financial services business attract different sets of investors, strategic partners and lenders having specific interests in the financial services business. So very interesting over there, unlocking of value for shareholders as well. So I'm going with green for Reliance Industries. But of course, standard disclosure, Reliance is the owner of the channel that you're watching. But the other stock in focus is Titan. Came out with its numbers yesterday, and Mangalam has the latest. Mangalam, good morning.
Good morning. So, Titan results were largely in line with expectations, and that's because the company had prepared the analysts with its fourth quarter cheat sheet. But the few soft spots in the numbers were the weakness in margins, largely in the eyewear business. Also, some sort of weakness in the studded mix as well. So if you just take a look at the revenues that the company posted, 9,700 crores as against expectations of 9,095 crores. That outperformance is explained by a sale of gold ingots worth nearly 1,055 crores, which the company does at the end of every quarter. The amount varies every quarter itself. The EBITDA, 1,044 crores versus street expectations of 1,056 crores, and the net profit in line at 734 crores versus our expectations of 737 crores as well. The jewelry business, the margins out there were 13.2% versus 12.5%. We expected a bigger spike there, largely because the studded mix was expected to be 35%. This time around, it was 33% and off its pre-COVID levels of closer to 40% as well. The eyewear business is where we saw a big dip in the EBITDA margins at around 1.2%. versus expectations of 15-16%, and that's because the company made a one-time payout to franchisors worth around 8 odd crores. So margin guidance on that will be crucial. I was listening to the con call yesterday. They had given margin guidance for jewelry as well as their watches business between 12 to 13%. So eyewear sustainable margins is something we'll be watching out for. And the good part is they said high-ticket items saw faster growth in jewelry, and gold harvest itself has reached pre-COVID levels. See the stock mildly in the red, largely because it's priced to perfection.
All right, and you'll hear from the Mangalam, thanks very much for that. You'll hear from the Titan management at 9:30 a.m. Ashok Suntalia, CFO of Titan, will answer questions with regards to the earnings that they have posted. All right, let's move on. ABB is the next one that we're going to focus on. How do the numbers look? Vivek has got details. Vivek, morning.
Well, good morning. ABB, we had highlighted, how the global had given a guidance as far as the Indian operations were concerned, and that guided that, the order inflow in Q4 was very strong. Remember, the company actually follows the calendar, so it's Q1 for them. Now, when you talk about the results, it's a very strong quarter, much ahead of what the street was anticipating. The key positive being the strong order inflow during the quarter gone by. So revenues up almost 22.5%. Margins have expanded by over 250 basis points. Optically, the net profit is down 34%. But it's actually on account of base quarter impact that we actually saw. So optically too, the profitability has been higher than expectations. Key highlights: order inflows of over 3,100 crores in the quarter gone by, up almost 37% on a year-on-year basis. And orders have come in from all of these segments, including the metal pack, the data center, as well as IT majors. So order book is very healthy at over 7,170 crore. And in terms of the outlook, the management has said the manufacturing sector is actually showing a very strong uptick. So they're seeing increased opportunities for their services going forward as well.
Oh.
Okay, all right. Thanks a lot for that, Vivek. Well, let's get in Abhishek. He's here to tell us about a whole host of financial names that came out with their numbers. Morning, Abhishek.
Morning, Nigel. To begin with, Cholamandalam, Velle and Subia has done a phenomenal job at handling Cholamandalam versus peers who are seeing a bit of slowdown, especially in the CV segment. The growth rate remains robust. Overall, the AUM growth is one of the best that you are seeing in the last 27 quarters, coming in at 36% plus on a YY basis and about 8.7% on a sequential basis. The disbursements growth was robust at around 20%. The asset quality is one of the best in the last 8 quarters. Gross NPA and net NPA ratio are one of the lowest and 8 quarters coming in at 4.63 and 3.11% respectively. Highest ever quarterly operating profits for the company at around 1,276 crores. The new business has taken off really well. The growth is robust over there, and the show continues that despite a strong base effect, they do continue to grow robustly. A cost to income ratio is one of the best in the last 5 quarters, coming in at 39.22%. So the digital initiatives taken by Cholamandalam is working really well. PNL, both in terms of NI and PAT, it's a beat on our poll by a massive number. Aavas Financial, the stock is down about 20% YTD and about 24% in last 6 months. The negative news flow over there is that their MD has actually resigned. So Sushil Kumar has resigned from the post. Number-wise, it remains strong. Asset quality has improved. The business growth momentum has been good, both in disbursements and AUM. So the spreads have actually declined a bit YOY and quarter-on-quarter. However, the net interest margin for the year has actually improved YOY. Back to you.
Okay, thanks Abhishek for that. So Cholamandalam could definitely be one of the stocks of the day. Very, very strong numbers coming through. But the stock has also gained about 25% this year. We will have a chat with Arul Selvan Dinesh, who's the President and Chief Financial Officer at Cholamandalam Investment. He joins in at 9:40 a.m., so you wouldn't want to miss that one. But let's go across to Sonal now. She's tracking a couple of names as well. There's Tata Chemicals, Petronet LNG. Sonal, hi, morning.
Good morning, Sonia. Starting with Petronet LNG, because it was a weak set, there was an expectation of a sequential recovery, but the numbers are lower and lower versus the poll as well. So revenues were higher at 13,874 crores versus the poll, that is, but they were down 12% on a sequential basis. EBITDA was lower at 940 crore rupees versus a poll of 1,078 crore rupees. Margins at 6.7% and profits at 614 crores versus a poll of 665 crores. Now, the Dahej volumes were up 11% on a sequential basis. Their utilization was higher as well. However, Kochi volumes were expected to be higher. They were flat sequentially with utilization at just 8%. In fact, FY23 is the weakest quarter in the last 4 years for the company. Now, Jeffrey says that in April, the Dahej utilization has improved to levels of 97%. That's a multi-quarter high. There were lack of surprises on capex, which was comforting. But if there's finalization of their PDHPP project, it could be a key overhang on the stock. But going with red one on Petronet LNG. On the flip side, Tata Chemicals reported good set of numbers. Revenue growth of 27%, EBITDA growth of 47%. Margins were higher by 300 basis points for the company and profits were higher by 54%. Both the segments, that is basic chemicals and specialty, saw revenue growth. For basic chemicals, it was up 32%. EBIT was up 70% as well. Specialty chemicals, revenue was up 4%, but there was an EBIT loss this time around. But going forward, commentary on pricing and realizations and demand as well is something we'll be watching out for.
All right, Sonal, thanks very much for that. Now, we've got more earnings lined up for you. Reema's got that list. Reema, morning.
Hi, morning. I've got 3 earnings. One is Sula Vineyards, the other one is KEC, and the third one is Sona BLW. So starting with Sula, it's a strong quarter. Revenue growth of 7%. The company's managed to maintain margins at 25.5%. For the full year, it's their highest ever annual sales. Premiumization is going up. The elite and the premium brands now contribute more than 50% to their overall revenues, a pickup of 600 basis points compared to the pre-pandemic level. Sona BLW too has clocked in a good quarter. 35% top-line growth, EBITDA is up 49%, PAT is up 54%, and the electric vehicle contribution too has been going up, and the company has won a solid 501 crore order from the EV space from a North American OEM in Q4. And finally, KEC International. Well, the order book for the company and the order inflows are very strong, but this time the margins have come under pressure for the company. So margins are down to 5.1%, and that's the reason why profits are lower by 35% year on year. Back to you.
Okay, thanks a lot for that. In fact, Sona BLW is another stock that, I mean, as Reema was pointing out, very strong numbers this time. And the management said that their electric vehicle business has grown at a really sharp pace. The only problem with Sona BLW is the stock price. The valuations are quite rich, trading at 40 times FY25 earnings. So that's something that you'd want to keep on your radar. Otherwise, no complaints with the numbers at all. Here's a quick recap. Let's thank our entire research team for joining in. Stocks with positive news flow: Reliance Industries, ABB India, Cholamandalam Investment, Tata Chemicals, Sula Vineyards, and Sona BLW. While stocks with negative news flow, there's Titan, Aavas Financiers, Petronet LNG, and KEC International. But the other big headline globally that we're tracking is the fall in crude prices. Crude is now at almost $82 a barrel, and that, of course, is positive for oil importing nations like ours. Manisha Gupta is here to give us a quick roundup of all the action overnight. Manisha, hi, good morning.
Thank you for that, Sonia. Well, yes, $72 a barrel really for the Brent prices. It's trading at a 16-month lows, and we've seen 4% of decline in the overnight markets. And with that, we are down 11% now for this week. The U.S. Fed rate hike has been as expected, but there is now fear of wider contagion in U.S. regional banking sector. We also have seen weak economic data. The inventories have continued to increase, and the supplies are on a rise as well from Russia and Iran, etc. And with the U.S. Fed done, the markets will now watch out for the European Central Bank monetary policy meeting today, where there is also expected to have an interest rate hike. That's really weighing on all industrial commodities. But within this, what really is shining bright is the gold price. It's trading at around $2,044 per ounce, and the knee-jerk reaction took the prices once at $2,080 overnight as well, even as briefly. But it is the precious metals that clearly are shining. Silver as well trading at a one-year high, so we are anticipating more strength onto this one.
Okay, well, thanks very much. Oil and precious metals in focus there. We'll take a very quick break here. We are back and Rajiv Samant of Sula Vineyards will be joining us to talk about their fourth quarter earnings. As Rima pointed out, that 7% revenue growth in the quarter, but for the full year, numbers are looking pretty strong, 20% plus. So that's the conversation coming up in just a bit. Markets, of course, are also very much in focus. We'll get you many stock views. Deepan Mehta, Director at Elixir Equities, also with us in just a bit.
Welcome back to Bazaar Morning Call. So let's start talking about a whole host of stocks that could be in focus. Deepan Mehta, Director at Elixir Equities, is joining us now to give us his view on plenty of stocks. Deepan, hi, good morning. The first stock on my radar is Chola Finance. Very good set of numbers coming through. But you know, of course, the group has seen their stocks rise about 20-25% this year. Do you see more upsides in such names post good numbers?
Yes, Sonia, good morning and thank you for having me on your show. I think Cholamandalam, first a disclosure that we and our clients are invested. I would rate it as among the best in class NBFCs, just maybe a notch below Bajaj Finance. And the way they managed the ILFS crisis as well as the COVID pandemic, the way they managed their NPAs and still managed to generate credit growth is really, I think, quite noteworthy over there. They are very sharp lending practices, and by and large, I think the hallmark has been pretty much low NPAs, especially when you compare them to the peer group like Shriram Transport, now Shriram Finance, and M&M Finance, which are predominantly the same business. And you see how Shriram and M&M Finance have fared versus how Chola has fared. You realize the quality of the management over here. Valuations, of course, are on the higher side because of absolutely great performance compared to their peers. And on the whole, I think that because the main consuming kind of industry, that is real estate, which is a new division for them, and commercial vehicles, we are seeing rising volumes. I think next 2-3 quarters will be exceptionally good for Cholamandalam, and we have a kind of a positive view on the stock. At corrections or even at these levels, investors could look at investing in them and making it part of their core holdings.
Okay. The other stock that I wanted to ask you about was Reliance Industries. So now the resolution for the demerger of the financial services arm has come through. Eventually, the expectation is that the listing could happen somewhere around September, October this year. Are you bullish on this name, or do you think that this space, you know, the financial services space, already really cluttered and could take a while before Reliance establishes its dominance here?
No, Sonia, I think Jio Financial will be in a league of its own. It'll have a superb tech platform, and it'll take on the likes of all the new fintech players. At the same time, it will have the financial muscle power and the resources of a traditional NBFC as well. So very positive on the listing. I'm sure it'll trade at premium valuations from day one. And the timing also is exceptionally good because all the banks and NBFCs are the favorites of the market. So you could have a good amount of fancy around the stock when it is listed. So we're very positive on that. In fact, I think the Reliance stock price is moving up in anticipation that investors may have a strategy of buying Reliance right now and getting shares of Jio Financial, and then even perhaps as a trading position, selling off Reliance after the price goes X and the Jio Finance shares have been demerged. And that could also be a good strategy because that would be the cost of holding Jio Financial shares, which would be at significantly lower levels than to try and buy on listing. So very positive on the entire transaction. And I do hope that the same strategy is followed through for the other two businesses, that is retail and Reliance Jio. I think that would be extremely positive for minority shareholders.
Deepan, hi, good morning. And good to speak with you again. Deepan, guys, if you remember, day before yesterday was talking about Indigo, how he likes Indigo.
Yeah.
And he said oil prices could drop. Well, from that point,
not only have oil prices fallen,
oil prices have dropped, and then there is, of course, this
key competitor has also dropped.
So it's just been completely, sometimes, what was that saying? Chappar phad ke deta hai. Or if you hold Indigo shareholders, of course, an airline going down is not good news overall. Deepan, okay, Indigo is, of course, I mean, you can comment on it if you want, but I have three specific names. One is Manappuram. The stock sold off some 10-11% yesterday. There was an ED sort of surges, etc., going on, and I'm not sure if these kind of large cuts usually we've seen do get taken back. I mean, they come back. So one is Manappuram. The tire stocks all rallied. MRF reported super strong numbers, some 30% EBITDA beat. JK Tyre rallied. You had C8, which rallied very sharply. So I want your thoughts on these names. Go on.
Hey, Prashant, good morning and thank you for having me. And thank you for remembering my Indigo quote. So, it's a great fortune, absolute blue sky scenario for the aviation industry. And I just want to add over here that Indigo has been aggressively adding capacity for the last several years, even before Air India was privatized. And it's only now that Air India is looking at adding capacity. So I expect that their market share will grow even further from these high levels. And next 2-3 quarters could be the best ever for the company and help it manage its balance sheet. Tire stocks are doing well because overall transportation is doing pretty well. We saw the GST numbers and, we saw that entire economy is picking up. So that is having a positive effect on tire stocks, and raw material prices have been passed on. And now you are seeing a slight declining trend over there, which will aid margin management, and these stocks are available at reasonable valuations. So we are seeing a positive upcycle over there. Manappuram, I would avoid. We are seeing intense competition in the gold loan business. Their margins are definitely under threat. It's not that their NPAs are shooting up. It's just that there are far too many more players, especially banks and some of the new generation fintech companies also, which are giving the likes of Manappuram and Muthoot a run for their money. And of course, this news of this news about ED, if at all, if it's true, then it's definitely negative. So although valuations are very attractive at Manappuram, maybe trading at or below book value, we're not positive on the stock.
All right, Deepan, request you to stay with us for a bit. We're just going to get to a conversation with Sula Vineyards. Well, we had the cheat sheet coming in earlier in April, but they reported a decent set of numbers in the fourth quarter. The company clocked its highest ever sales in FY23 with quarter 4 sales driven by premiumization. We have with us Mr. Rajiv Samant, the MD and CEO at Sula Vineyards, who joins us on the show. Hi, Rajiv. Good morning. Thanks so much for joining in. Well, let's get a couple of numbers out of the way since we're getting into pre-open. Your margins for FY23, well, they expanded by around 200 basis points. This has you scaled up your own brands to around 87%. And of that, the elite as well as premium, well, that's scaled up to around 72%. What's the target for FY24 on margins? Can you head towards that 30%? And also, what kind of revenue growth you're looking at?
So I'm really happy to say that our margins have grown something like 350 basis points from around 25.6% in FY22 to just north of 29% in FY23. We do see maybe a little bit of margin moderation in FY24 as we really push for wine to penetrate further into tier 1 and tier 2 cities. That's really our focus right now. We think we've reached a fabulous place in terms of margin. What we are looking for is strong double-digit growth in our own brands, and basically growth in our own premium brands, our focus on wine tourism, all our high-margin businesses, but pumping some of that money back in the market to get more Indians drinking great Indian wine.
So, Rajiv, you're saying that margins will be in this vicinity, maybe shave off close to around 100 basis points. Is that something we can work with? And do you want to quantify the double digit? Give us a broad range. Double could be 10 to 15, 15 to 20, 20 to 25. Which slot are you going for?
That's a fair assumption on the margins. That's a very fair assumption. I think if we did anything less than 15%, I would be disappointed. That's where I would like to leave that.
Okay, so around 15% revenue growth for the next year, and margins will moderate, but you'll be somewhere around this range itself. Got that. I want to understand a little more about growth, because you said you're penetrating and you're trying to penetrate.
At least 15%, I said. You said around 15%.
With an upside.
Upwards of 15%.
Okay,
upside, Sonia, because your co-anchors will help, I think.
Okay, many of them in the studio here will help you contribute.
I'm still not a convert. So. But I think Rajiv is trying.
Definitely. I mean, he doesn't need us to contribute. The way it's going.
If you're a whiskey man, we'll start you with red wine. That's the way that the trends are going, especially in North India. India is drinking a lot of red wine, even though
Absolutely.
You're speaking to your
I think we should be a white and rosé wine country, given our climate, given our food, given our spicy food. But for some reason, I don't know, you tell me, everyone wants to drink red.
So I'm a teetotaler. So you're speaking to the wrong person here. But, you know, my co-anchors...
That's part of our job. We have to convert some whiskey drinkers and some teetotalers.
Okay, let's see how that goes. But, you know, tell us a little bit about, I mean, I was asking you about the expansion plans. Do you have any plans for inorganic growth? I mean, any acquisitions that you'd be looking at? And what kind of expansion are we talking about here?
You know, wine is not a target-rich space in India right now. And, you know, we already have 60% plus market share. So I would not say that that's a burning focus of ours right now. However, having said that, we've always been open to acquisitions. We've made a couple of acquisitions over the last 6-7 years. You know, we acquired York Winery just a few years ago. So we are always up for it, always looking for it. If somebody is interested, they always know that we'll always give them a good open year.
Rajiv, you know, I remember you saying that bulk of, and correct me if I'm wrong, of the wine that you sell, the price point is between 700 and 1100 rupees a bottle, right? Is that going to still be the thrust of your focus? I mean, or you'll go lower as you enter new markets? For example, you've entered the Kerala market in the fourth quarter. Now that, at least from what I know, is not the wine drinking kind of market, a typical wine drinking market. But yeah, go on.
So you must remember one thing that, you know, obviously wine is very tiny. So when you talk about typical, you know, wine itself is not typical in India. So that's nothing that we're not used to. Now we dominate the market starting from 250 rupees all the way up to 2000 rupees. That's the Sula price point. 700 to 1100 has been really our sweet spot over this past year especially. But we are pushing more and more even upwards of that, because you have more wine drinkers, I'm sure a lot of your friends who today are not looking at bottles below 1500 rupees. So you have that segment as well, and Sula is taking market share very rapidly in that segment. That remains our focus. We are not focused below 700 rupees. Having said that, we still dominate even below 700 rupees.
Okay, just one final question, if I can squeeze it in. Are there any state-wise controls on distribution and pricing? And is that an impediment like it is for other alcohol companies?
Yes, we do have a lot of states that do have controls on wine pricing, just as with spirits and beer pricing. What I would like to say, though, it's been good news mostly in this past year. Most states have, in fact, given a little bit of price increase, which hasn't happened easily in the past. You know, states were recovering from COVID, very difficult financial situations in most states. Today, states are in a much better financial situation, and they're not looking to milk the booze cow just as much as they used to, say, 3 or 4 years ago. So it's looking good.
Okay, all right, Rajiv, I like that. Early in the morning, you know, people talk about converting to veganism, veg, non-veg. You're talking about converting the whiskey drinkers to wine. So,
you know, I call wine as the vegetarian drinking option.
Call it as it is. Rajiv, thanks so much for joining in. And you spoke to part of your target audience, I think so. And part of that...
Always a pleasure.
At the side of me. All right. Well, time to slip into a short break. Up next, we'll get Mitesh Thakkar as well as Sudarshan Sukhani. They'll be joining in to give us some of their technical ideas. Stay with us.
Okay, welcome back. There's about 9 minutes to go for the pre-open session to kick off. SGX is right there, 40-50 points lower. 18,110 is where we're at. Mitesh and Sudarshan are with us with what they're making of the situation and the setup this morning. Gentlemen, good morning. Good to have both of you here. Mitesh, let me start with you. How are things looking Yesterday, we had a sort of negative daily close, both the Nifty and the Bank Nifty, and overnight cues are mixed. So it's not exactly a clean handoff in that sense. Your thoughts?
Morning, Prashant. So, yesterday I was advocating against taking long positions purely because my belief was that the market was slightly overbought is yet on the intraday charts, and we, possibly could see a bit more of declines. I think that has played out nicely. I believe that, eventually the markets will give you a good chance of entry around the levels of 18,000 to about 17,950 or thereabouts. And then I think, which is where you can possibly look at buying back again. So that's the idea. The Bank Nifty also is very close to its all-time highs, meaning that, the Bank Nifty will also face some supply around these levels of 43,500, 600 levels. And given the fact that both the indices have had a rally, they are overbought, I think you might want to wait before you want to venture or explore long positions again.
Okay, Sudarshan Sukhani is also with us. Sudarshan, what would your view be? Is it time to explore long positions or not quite yet?
Good morning, Sonia. No, I don't think it's time to explore long positions. The markets are going to be choppy. That is natural when they consolidate. So we don't have any signs that the choppiness or the consolidation will end after just 2 days. It's very unlikely. We may see upswings and downswings both. I think the earliest we should look to buy is if the Nifty comes to a strong support level of 17,850. And otherwise, we let it be. There is no sense in entering a choppy market. It just results in losses. Just be patient.
Okay, all right. Morning, Sudarshan. But there'll be individual stocks that you'll be tracking. So which one are they?
Yeah, there are always opportunities there. Pfizer is a buying opportunity. There was a big bear market in Pfizer. Now that recovery has already started, after a decent rally, it's consolidating. I'm assuming the consolidation will break on the upside. So buy with a stop under 3,600. UBL is my only intraday short. For some reason, for the last 2 days, it's been falling consistently. Apparently, the rally is fizzling out. That's an intraday short with a stop above 1461. ICICI Prudential is another short. Essentially, I have 2 longs and 2 shorts, which really means an uncertain market. So ICICI Prudential had a rally. That rally again did not sustain. It did not go above its previous highs. Now we have falling momentum. So intraday short with a stop above 440. And Dixon Technologies is a buying opportunity, but it's a high risk buy. Maybe the trend is changing. So we'll just find out with a stop under 2,800.
Okay, all right. Thanks a lot for that, Sudarshan. But Mitesh, what about you? What would your stock ideas be? And any thoughts on, a couple of these names like Indigo, etc.? Do you see follow-on buying there?
First, I'll cover my stock ideas.
Sure.
I have a buy on in the copper with a stop at 102. I'll look for targets of around 111 here. Pidilite is something which is also getting into momentum on the upside. So buy here with a stop at 24.40 for targets of 2515. And a couple of sell calls. Bharat Forge is something which gave a negative crossover on the intraday charts. So sell with a stop at 791.5 for targets of 767. And Sun Pharma is a sell with a stop at 973 for targets of 944. On Indigo, I think, yesterday with obviously, the news flow kind of saw the stock gap up, and the overall trend is very positive. But the stock can possibly, find a lot of supply around these levels of 2,300, 2,320, which is where the stock had peaked out in February, and before that, I think in November. So I think there's a trading bet. Yes, it can stay at 6-7% kind of an upside, but then you will see supply come at high levels.
Okay. All right. Thanks a lot, Mitesh and Sudarshan, for that. Let's take a quick break. On the other side, we will have Pirojsha Godrej of Godrej Properties to talk about their Q4 performance, which is very strong this time around. Stay tuned.